Guru Busters!
Welcome back to our channel. Today we are tackling a tough subject: trading the market. Initially, I overlooked some red flags on the channel, mistakenly viewing them as allies in our fight against scams. This was a major oversight. Everything changed when I was asked to review Trading the Market's latest strategy video on Discord. After watching the video, reaching out to Trading the Market and conducting thorough research, I found discrepancies I couldn't ignore. The strategies they promote are not just ineffective, they are harmful. Despite their claims, the results they showcase in the Lay Over 4.5 Goals video are fabricated. After my initial critique, I received some backlash, and James, the creator of the video, essentially challenged me in his latest video to provide proof. Well, people correctly pointed out that I can't simply say, "This is fake, trust me bro, because I say so." And I indeed need to deliver. Well, I can. Before we start, let's be absolutely clear. The Trading the Market guys aren't scammers. They don't charge for worthless courses, and they are putting a lot of work into maintaining an online community. However, if they are promoting bullshit strategies that encourage enthusiastic followers to copy them and inevitably lose money long term, then the whole thing is a net negative. Furthermore, I had good chats with Mark from Trading the Market. I seriously didn't have the impression that they set this up to scam people. However, it's pretty naive to believe that just because someone isn't charging and promising to never charge, they won't abandon that promise one day when they are big enough. The business world is replete with such examples. They actually started to monetize their channel by having a deal with a data provider, but in my opinion, that's still totally legitimate. Let's dive into it. The Lay Over 4.5 Goals strategy is a preplay one. So first we need to learn some things about preplay markets in football. The liquidity and the turnover in preplay markets are enormous. What you see on Betfair is just a tiny fraction of what's going on worldwide, especially in Asia. Let's take a look at Pinnacle, an Asian bookie. Also, they are not located in Asia. We check a few games shortly before kickoff on the 5th of May. Chelsea against West Ham. You can bet 54,000 on Chelsea. On Betfair, where the liquidity for the Premier League is actually relatively good compared to other leagues, you can find similar amounts available combined across the matches market. However, liquidity for other markets like under 4.5 goals is already significantly lower. Back to Pinnacle, you usually want to play the handicap instead of the match odds as it has a better overround. The limit there is 70,000. Under 4.5, it's 44,000. The gap in liquidity between Pinnacle and Betfair widens even further in our leagues, showcasing significant differences in betting limits. In the Eredivisie, we get 20,000 on Ajax. While at Betfair, there isn't too much happening. In the Segunda División, you can bet almost 15,000 on Eibar, while only 10,000 is matched at all on Betfair. An extreme case is the Belgium Second League. Under 4.5 in the normal game is 3,000 euros. And at Betfair, the market is basically empty and nothing is matched. These examples illustrate just how unimportant Betfair is for preplay betting. And that's only at Pinnacle. In Asia, you can get much higher amounts with the right contacts. This immense liquidity leads to a highly efficient market, driven by fierce competition among highly sophisticated players. Take Tony Bloom for example. He isn't just the owner of Brighton and Hove Albion, he amassed most of his fortune, estimated around £1 billion, through his betting company Starlison. Similar entities such as Smart Odds, White Swan Data, or Football Radar, and undoubtedly others that are less publicly known, also play a significant role in this arena. These syndicates aren't just playing the odds, they are shaping them. With armies of mathematicians and data analysts, they develop highly sophisticated models designed to estimate the odds. Beyond crunching numbers, these syndicates take it a step further. They employ hundreds of so-called watchers, individuals tasked with analyzing every detail of football matches worldwide. This allows them to derive stats that are superior to what is generally available online. While most of us might look at expected goals as a measure of performance, they have access to far more precise statistics. Because of the competition, the edges are razor thin. While startups that doesn't publicly publish their numbers, some sources estimate they make about 1% on turnover, which is considered the low end. Other sources suggest it could be as high as 2.5% on turnover. Well, if we take the lower estimate and they bet 5 billion a year, that's a profit of 50 million. At the higher end, that profit could increase to 125 million. What does 1% on turnover mean in practical terms? For example, if you are offered odds of 2.02 for a bet that's fairly priced at 2.0, that's a 1% margin in action. Similarly, a 2.5% margin would be reflected if you are offered odds of 2.05 on a bet that should be priced at 2.0. That's the benchmark, guys. With super advanced systems, they can achieve those kinds of returns. Coming back to our lay over 4.5 goal strategy, this system doesn't even utilize stats. It merely relies on goals scored in past games to devise a magic number that supposedly produces value bets. If you believe you can compete with the big players in preplay markets using such nonsense, while completely disregarding advanced stats and everything else, you are, and I'm choosing my words carefully here, very, very naive. The market isn't 100% efficient though. You can still find value in preplay betting, but achieving this without inside information requires a robust model. You must understand the intricacies of preplay betting, like knowing when the big players are likely to place their bets to scrape together a bit of value. The potential value you might find is modest. If it were significant, you'd become extremely wealthy quickly, because market liquidity allows you to scale up your bets significantly. We will soon explore how that scaling works. Interestingly, it's possible to generate a modest amount of value on betting exchanges, not necessarily through a super advanced model, but through strategic bet placement. However, this skill appears to be lacking, as is evident if you watch the over 4.5 goals or other videos by Trading the Market. So we've already established that achieving a significant edge through preplay betting is nearly impossible. And even securing any positive edge is extremely challenging. And this brings us to an amusing point. Imagine, hypothetically, that you had discovered an edge in betting or trading using a very simple method. The absolute worst thing you could do is share this edge with anyone, let alone thousands of strangers on the internet. As soon as more people start doing the same thing, the market inefficiency would quickly vanish and your edge would disappear. You wouldn't just be sabotaging yourself, you would be eliminating the opportunity for anyone else to profit. You will never find a successful, easily applicable, scalable trading strategy on YouTube. Never. All those videos promising profits with their simple strategies are complete nonsense. Every single one, without exception. You don't have to understand much about betting. This is simple logic. And if you don't get this, you are, and again I'm choosing my words very carefully here, dumb as fuck. Dumb as fuck! Seriously, I don't have other words for that. This is precisely how all these scammers are making money. By preying on people looking for an easy way to make profits. Follow my super strategy. Buy my bullshit course for 2000. It doesn't work. It can't work. So we haven't even discussed the proof yet, and you should already be convinced that this layover strategy is complete nonsense. Case closed? But you still want to see the proof that the results are fake, right? Let's examine the results presented in the video. Guys, if you're new to this, you might not spot the issues immediately, and that's understandable. But with my experience, I could tell right away. No. This can't be real. These results are 100% fabricated. I didn't even have to calculate it. This is impossible. But don't worry, I'll break it down mathematically and logically for you. So let's break this up. 201 lay bets, only 2 were lost, and the average odds were almost exactly 7.8, which you can calculate from these numbers plus knowing the amount of the 2 losses. Allegedly, this led to a profit of £27,000. 7.8 plus Betfair's commission of 2% gives us effective odds of 7.9388. I hope you know how to calculate that. Now let's consider a very unrealistic assumption to illustrate the absurdity. Let's assume the true odds for these bets were 10.0. Just 10.0. Far more conservative than the win rate suggests, which would imply odds closer to 100. So 10.0 seems pretty low, as you'd expect to have about 20 losses after 201 bets, not just 2. But we are already in complete fantasy land now, as that would be a return on turnover of almost 3%. 3%! You'd be more profitable than Tony Bloom, with an absolutely nonsensical and super easy system, while Tony and his team, with the highly sophisticated strategies they've been constantly improving for decades, need to wonder why they are doing all the work if things can be that easy. But let's entertain that assumption. What would happen over the long term if we really had such an edge? Picture this. If this system actually worked, you could become incredibly wealthy with minimal effort. By consistently applying the strategy with proper staking, you might expect to multiply your initial bank by an average of 21 times, with the median increase being 11 times, in less than 1.5 years. Sounds too good to be true? Let's break it down how. We keep the odds constant at 7.8 and 10, which makes things easier. But the results would be almost the same if we just keep the value constant and the odds variable. We play 1000 bets with a 50% carry stake. According to the carry criterion, we should risk 20.61% of our capital with each bet. Half of that is a bit more than 10%. I simulated that in Excel, and here you can see sets of 10 runs, each representing 1000 bets. For example, this one would have 20x to our bank. If you started with a 10,000 euro, pound or whatever currency bank, you'd have 200,000 now. The 201 bets took a little bit more than 3 months, so you'd have these 1000 bets in less than 1.5 years. So guys, if you believe that this system works, what stops you from becoming a millionaire? Just set and forget it for a few years. Put in hardly any effort and you could retire early. But the funny thing is, our Tony Bloom II from Trading the Market, he doesn't need the money. That's why he decided to not only share his great edge with anyone, he also didn't bet it properly and instead played that huge edge with a £150 flat stake, completely squandering his edge. You just can't make this stuff up. Something doesn't add up. On the one hand, he's the best preplay bettor in the world, and on the other hand, he doesn't know the basics of correct staking. Perhaps money indeed makes him unhappy and thus he is trying to win as little as possible with his so-called system. But don't worry, it gets even more bizarre. Let's keep our assumption going. Suppose this James fellow is a genius who indeed captures this massive edge. Lay odds of 7.8 while the true odds are 10. What if I told you that the likelihood of achieving the results he claims is just 1 in 5.8 million? You can take my word for it, or better yet, calculate it yourself. I will show you how to do that step by step. We'll use a fascinating concept from statistics called the Binomial Distribution. And we start by using a very simple example of rolling a die. Imagine you have a fair 6-sided die and you're going to roll it 100 times. Since the die has 6 faces, the probability of rolling a 6 on any given roll is 1 in 6. And not rolling a 6 is 5 in 6. And we want to find out the probability of rolling a 6 a certain number of times. We don't need complex formulas here, Excel has a function that does all the work for us. In the first column we list the number of 6s we could roll from 0 to 100. In the second column we will calculate the probability of each scenario using the Binomial Distributions function. Next, click on the cell beside our first outcome, which is 0 6s, and type this formula. I'm using the German version of Excel, so the formula I actually type here is slightly different. This tells Excel to calculate the probability of rolling exactly 0 6s out of 100 tries, with each 6 having a 1 in 6 chance. But for later we are actually more interested in the probability of rolling a 6 a certain number of times or less. So in the next column we simply copy-paste the formula and change this to true. After that we drag the whole thing down to apply to each number from 0 to 100. Excel calculates the probabilities for each scenario. It's that simple. Now let's create a graph to visualize these probabilities. Highlight our data, go to the Insert tab and select Recommended Chart. Then choose one. Here's our Binomial Distribution chart. As you can see, probabilities increase up to a certain point and then start decreasing. It's extremely unlikely to roll less than a few sixes and even more unlikely to roll more than 30 or so. And guess what? We don't actually have to change much if we want to test the layover 4.5 betting data here. Instead of 1 in 6, we now have 1 in 10, as we said the true odds are 10. And instead of 100 rolls, we have 201 rolls, or bets in this case. Now observe how the probabilities go even further toward the improbable. We find it's highly unlikely, 1 in 5.8 million, to have only 2 or fewer losses in 201 bets. So guys, to believe that these results are genuine, you have to believe that James is not only the best preplay bettor in the world with a nonsensical system, but also the luckiest punter alive. And if we were to adjust the true odds assumption of 10, well, if they were higher, you'd supposedly become rich even faster. If lower, then achieving only 2 losses becomes even more improbable. Now I'm eager to see the mental gymnastics needed to debunk this. But you know, I already know what some delusional trading the market followers might say. I've been using this system since last month, and it works! No, you moron, it doesn't work. You've simply been lucky so far, and you clearly don't understand the impact of variance in betting. You need to grasp this massive impact. It's truly eye-opening when you actually do the math or run a simulation. Let's make a simple example. Assume you make 1000 random bets with a fixed stake at odds of 2.0. Well, these are the fair odds in a market with a 100% overround. After factoring in a 2% commission, the real odds you're getting are actually 1.98. So each of your 1000 bets has negative value. Now what do you think is the likelihood that you are still up after these 1000 bets despite their negative value? The answer will surprise you. I simulated it and it's about 37%. A 37% chance that you are still up after 1000 nonsensical bets. So if you're feeling smug because the system you followed seems profitable after just a few dozen bets, you're completely kidding yourself. Even a few thousand bets aren't enough to conclusively determine whether a simple system is effective. Unless you're capturing enormous value, and that's just not possible with a simple preplay system. So how did James fake the results? It's actually quite simple. He likely back-tested his simple strategies until he found something that appeared promising. Then he applied selective filters and found convenient reasons to exclude certain matches. Afterward, he simply pretended that he had placed these bets all along. Here's the hilarious part. James doesn't know much about betting, and even less about statistics. This ignorance led to his overconfidence, making him think there was no way we could prove his results were fake, because the odds were real and the bets were available. So he boldly challenged me to prove it. Well, let's just say he might be regretting that challenge now. Let me reiterate. It's impossible that these bets were made as presented. In reality, you wouldn't have such an edge, and you would definitely have more losing bets in between. The way James presents it, it looks flawless. And that's just not how betting works. He's essentially cherry-picking the data to create an illusion of success. Are we finished? Almost. I actually watched all the strategy videos that James has published on the Trading the Market channel, and it's just unbelievable how poor these videos are. They are full of blunders and display a complete lack of market understanding. We can debunk every single one of them. Every single one. They're not just flawed, they are harmful. But you know, we actually already debunked one. He is essentially rehashing the Alex Ong under 2.5 strategy, which we exposed right at the start of our channel. We could make a video debunking each of these strategies. But I have a better idea. Instead of lengthy expose videos on sports trading scammers, we'll start a series of reaction videos. In these, we will highlight all the blunders and self-exposures these guys make. It'll be more entertaining, more efficient, and actually more educational for those of you interested in learning more about sports trading. We will mainly focus on the real scammers, but we might throw in some trading the market videos as well. If there's a specific video from any channel you want us to debunk, drop us a hit in the comments. And a piece of advice for trading the market. Clean up your act. It's perfectly fine to make betting videos as someone who isn't turning a profit, like explaining basic concepts or how to analyze data. But don't claim to be professionals when you are not. And most importantly, stop encouraging your viewers to lose money by following your flawed strategies. Even without selling courses, you are doing more harm than good by continuing to publish such nonsense. Until next time.
Guru Busters!